Good evening, everybody. This is Sascha with the evening/weekly update for the NASDAQ 100. Yeah, I'm on the weekly chart right now. So that's a weekly time frame here. And the biggest degree I'm counting at the moment, okay, is the cycle degree. And in my view, we finished the cycle. So just an explanation. I'm just throwing up a bigger picture at the moment, and then I'm going to zoom in and we discuss the internal count, okay, internally here in this last legs up, okay. And for now, in my view, we have completed cycle wave 1, cycle wave 2. We are in the cycle wave 3. And the cycle wave 3 consists of 5 waves of primary degree, which are labeled here in the circles, where we've done wave 1, wave 2. We are in the finishing stages of wave 3. Then we expect another wave 4 in the primary degree and another wave 5 to finish then the cycle degree 3rd wave. So inside that primary degree 3rd wave, which we are having up here, there are 5 waves of intermediate degree, which are labeled 1, 2, 3, 4, and the 5th wave we are in right now. Okay, it's just to give you a big picture. And after that primary wave 3 top finished here, I do expect a pullback in the primary 4 and then continuation to the upside in the primary 5 to finish cycle wave 3. And then so on, we get a cycle wave 4, cycle wave 5 to finish super cycle wave 1. Okay, that's at the moment the route. I have the chart, or I have it labeled here. And at the moment, everything is looking good so far. Yeah, I think that's the bigger picture, that you know where we are right now. Okay, that we are in the finishing stages here of intermediate wave 5 to finish our cycle wave 3 up here. And that projects to me also that the major cycle top could be in play here. And afterwards expecting this primary 4 low here. I'm going to zoom in now on the 4-hour chart. Oops. So I hope that you could follow me here, what I was talking about, so that you have the bigger count in play. Right now, maybe I need to go, let me go on the daily. Yeah. So here is the intermediate wave 4 low, this low here, from the, let me just check it, from the 17th of October in 22. That's intermediate wave 4 low on my chart. And since then, all this move up is the intermediate 5th wave to finish the primary wave 3 up here. So, and in this intermediate wave 5 from the lows of 22, there are again, you can see that here, these are labeled like this. This is the minor degree. There are 5 waves of minor degree, where we have done wave 1, wave 2, wave 3, wave 4, and we are in the last stages of the minor wave 5. Okay, that means we are talking about the minute degree at the moment. Yeah. I mean, later we're talking about the minute degree. I was just a little bit confused, but we are in the minor 5, okay? And all these subways internally are minute degree then. But I'm coming to that in a second. Yes, in my view, from the low of 22, we are forming a nice diagonal pattern to the upside in my view, okay? Which consists every subwave in the minor degree or the minor degrees are all corrective nature. So I will show you what I mean about that. We have an ABC for wave 1, a WXY correction for wave 2, an ABC for wave 3, another correction, another corrective pullback in wave 4. And now we are in the lower degree, which I was talking about before, that we also form a possible A, B, C structure. And there's now the tricky part, which you all know from my video, from my last videos that it's getting really hard or challenging to predict the rest of the move here because we are so close, in my view, to a top, and we should expect. Sorry, my phone ring. We should expect at any stages here our fourth wave degree or our primary wave 4 pullback. Okay, and that is this degree. Okay, and that's a major pullback in my view. So let's see how this is playing out. But for now, we really have to focus on the lower time frame, and that's why I zoom in. I hope that was clear with the diagonal pattern here. Okay, that is all corrective nature in my view. I cannot count clear impulses here, otherwise it would be labeled different, but it wouldn't fit. So at the moment, I go with this diagonal pattern from our intermediate wave 4 low from 2022 lows. So let's zoom in here on the lower time frame. I go on the 4-hour now. And you can see here now, we have here our minor third wave, our minor fourth wave, and we are in the minor fifth wave. And due to that being a diagonal pattern, we also need an ABC structure to the upside. And at the moment, I have labeled it like an A wave. We are in a B wave, possibly finished, but we go into that in a second. And I do expect another C wave to the upside. That is at the moment the plan until we don't break several levels. And on the bigger time frame, I'm going to mark that. Here's my line. And a break only above that low is indicating that we are in the bigger correction. And that swing low is from the 6th of September 24 at 18,882 and 25 roundabout. Okay, it's not very accurate, but this swing low is the most important. When we have this swing low broken, we can be sure that we are in the primary wave 4 pullback. Until then, as we all know, we can also measure Fibonacci levels, but I'm not doing that right now. The technical invalidation for the upside continuation would be that change of character here. We start printing lower lows, and this would indicate for us, or would definitely tell us that we go lower. At the moment, I do expect one more high. The thing is, it could also be finished here by saying it's an ABC structure, and we put everything here. So that is the high of 16th December 24. That could also be because I can count. No, I cannot really count because this is not a C wave here. And a wave pattern cannot end with a WXY. That is not possible. So I do expect that we are in the sideways consolidation in a B wave, expecting one more high in a C wave. Okay, the C wave can be short in this kind of pattern because we are in a diagonal pattern, and these diagonal patterns, they have that also always tells us that the buying power or the buying is getting lower and lower and lower to the top, and that's why we also have these kind of structural ugly moves here. I have to say it like this, and this telling us indecision in the market, and not even the bulls or bears can win inside here. It's just an up and down and sideways consolidation, and that's why it's really hard to predict all these moves inside here. But for now, what I can do here at the moment, I go on the hourly time frame, is that, and you know that from my last videos, is that I see that not anymore as a wave 4. Okay, it is not fitting because previously we were counting as 1, 2, 3, 4, 5 on the minute degree. Okay, this is not working. It's definitely not working. I mean, the time factor is not an validation, but the rule of alternation is a very important rule in Elliott, and this is telling me that this whole sideways consolidation cannot be a wave 4 anymore. So therefore, I've relabeled that as well. And I have to go on the 4-hour again. And at the moment, I have labeled it like this, that we come from our minor 4 down here. Let me see, am I right in the degree right now? Let me see. Yeah, in the minor 4 low from the 5th of August. In my view, we did an ABC for wave A, which I've labeled as A up here in white. We are now in a B wave pullback, possibly finished here, and we do expect a C wave to the upside. We can still not tell if this correction is done, or we do expect lower prices. This is at the moment not possible. And if I would tell you this, I would lie, and that would be not appropriate in my view. So can just say that I work with probabilities on the chart, okay? And at the moment, I do assume also due to this push today, the potential is still high that we go higher further here, also in the corrective structure, okay? Because at the moment, I'm counting this as a WXY structure to the downside, okay? That would mean we see lower lows and we break to the downside sooner or later when we hit several targets. That we go higher, I cannot promise that, but it could already be, because we took that high, that we have to put the X wave top here, okay? That this was our ABC structure in the Y wave of X here, and then we should come lower, honestly. But this is only, I can only tell you this as well when we break that swing low here. You know, I have to just be honest with you. I cannot, you know, there are so many people out there talking, oh, we are bullish, we have to go to the moon, and you know, it doesn't make any sense if I talk like this. I just have to make it with a good heart and tell you what could be going on. And trust me, guys, it's really not easy at the moment. It's really not easy, okay? And therefore, I give my best to analyze the content here for you, to give a good technical analysis here for you. So and I've also prepared a trend channel here, which you can see here. It could be that we work in our way higher here, okay, and then possibly grab our targets, because remember from my intraday update video, I'm going to show that to you. We have a big bunch of liquidity sitting above us, and possibly the market will go and grab that. And you see it directly here. So this is my target area, okay? So my target area for the possible X wave to the upside, if we move higher and we don't put the X wave here. The potential that we go higher and morph higher in the channel is relatively high, because normally the market tends to grab these liquidation areas. And this is a naked point of control, which sits directly at my 88.2 FIB retracement level at 22,002, what is it? 235? No, give me a second. 20,255. That's the level the market possibly can reach, honestly, okay? And that would mean that we morph our way higher in this trend channel possibly, and then break to the downside. And this is still part of this B wave. But at any point, I have to say also that B wave is too long a time. But B waves, they are very, very unpredictable. And this is a pure textbook example of a B wave. And I have to tell you, this is very ugly and very, very hard to distinguish what is going on here. But it needs to be done. You know, you cannot go and say, "Oh, it's too strange for me. I don't want to do that." And but it's like that, guys. And yeah, so the potential at the moment is still high that we possibly merge our way higher and grab this liquidity sitting at the 88.2 at 20,255 and then sell off again. Okay, and that is the part we have to observe right now. A break, in my view, a break. Let me just adjust that. Is that the tie? Yeah. So in my view, a break below the 78.6 retracement here at 21,152. So if we go higher, lower directly here, A break below here would indicate that we come down further, okay, and that we don't reach these upper levels here. But if we hold, for example, the trend channel, which is, by the way, the 78.6, I communicated that in Discord today for our members. If we hold that area, for example, and take out that gap to the upside, we have to see how this is then developing, okay? If we're going to close this gap and the market tends to go higher in this price channel, then the possibilities are high that we're going to go and merge our way higher somehow, okay? How this will happen, I cannot tell you, but it would fit also that this C wave, so that would be an ABC and the Y wave, it needs to reach several levels, and it didn't reach anything. So we broke above the 61.8, which is here. I'm going to remove that now. And the C wave, in my view, should go a little bit higher. Also of this dump, okay? This is was not much pain. I mean, we did nearly 270 points or something. But at the moment, we're holding these levels. And as long as support is holding, there's no need to get afraid or something, you know. It's just a sell-off. It's okay. It was news driven a little bit, but it's not the time at the moment. It's not a move that we say that we should cry or run for fear because it's just crashing. At the moment, it's not. We found support here, and at the moment, if we hold the 78.6 FIB retracement level at 21,535, there's still a possibility that we go higher, grab the liquidity, and then sell off from here. Okay. And it could still be part of the correction, this WXY structure. The other potential at the moment I have labeled in yellow. So this is the first scenario, okay? And if we got rejected up here in this area, I do expect a sell-off, either in an ABC structure or in an impulse to the downside. Because if we count this just as an ABC, I mean, the root of both counts are the same. If we count it as an ABC, we do expect lower prices, but the C wave would be a 5-wave pattern. That's why I have it here in yellow. Okay, 1, 2, 3, 4, 5. This would be the alternate scenario if we are in an ABC structure. And the WXY pattern would suggest that we come down in ABC because the Y wave needs to be in ABC. So it's kind of a double zigzag, okay? So very, very simple to recognize these patterns. But at the moment, there could be two opportunities when we sell off from here. There's a third. I'm going to talk about this in a second. Let me just put these in another color so that we know that and we can make it blue. So the blue wave count here is when we hold this area, get rejected, sell off 1, 2, 3, 4, 5. Okay. The white count here is my highest probabilities right now that we come up in this X wave and the Y wave of X, and then do an ABC structure down, and then we can be sure that it was a WXY. But both routes, either an ABC or a WXY, both routes point to lower prices at the moment. And there's another scenario I'm going to talk about in a second. I hope you understand this part right now, okay? This would say, this move up would say, and this rejection would say that here we finish our B wave down, okay? That the B wave here is still in progress, even with this high and with this low afterwards. And then we would put our B wave down here. It's an ugly long B wave compared to the other part or the other waves in this degree. But we have to, at the moment, think about this, okay? And if, for example, we move directly higher here, so possibly like this and move higher from here, it could be the yellow count here that we had a triangle finished here in A, B, C, D, E. The E wave finished here in this low, and we are moving our way higher. I cannot tell you this right now only, and this is why I have my green line above here at 22,567, which is the swing high here from the 16th of December. Only a break above that swing high would indicate that the triangle E wave bottomed here and we go higher. Okay, so that is the only scenario where we can be sure that our A, B, C, D, E A wave triangle finished and we're moving our way higher. Only a break above that green line is indicating that. Yes, now we have three scenarios. Okay, the first one is that our B wave bottomed here in the E wave, because B waves can be displayed or can be done in triangles. This is working perfectly fine. And if this is the case and we have our E wave low here, then this is already the move up in the C wave. But I have to tell you guys, also a C wave needs to start in as a zigzag, so it needs to be a 5-3-5 pattern. Uh, Yeah, of course. No, sorry. Please forget what I talked about. Please forget the last 1 minute. The C wave needs to be an impulse to the upside. And get too much on the chart, guys. It's like the C wave here, when we consider this being an E wave low here of the B wave, the C wave needs to rally in an impulse. Okay. C wave sometimes, and this is possible. This is not, no, it's not possible. Forget that. So the C wave needs to be an impulse to the upside. And that's why I go with the white scenario in my view. The C wave needs to be an impulse, and I cannot count an impulse at the moment. That's why I say that this is something corrective to the upside. Okay, either being this Y wave of the being the Y wave of the X wave, and then followed continuation to the downside. These are now the three scenarios. I'm going to go through them again. If we consider our B wave done here in the E wave, and we're counting this as an A, B, C, D, E triangle B wave, then this needs to be the start. I mean, it could morph into something like that, okay? I give the benefit of the doubt because these ugly structures are like very ugly and it's very hard. And so I give it the benefit of the doubt. If we move higher, okay, I'm happy and we can close this book. You know, it's just an ending of a horror movie inside here. So this is the first scenario. We finish our B wave triangle and we move higher from here. Okay, this can only be seen by a break above that, swing high and continuation higher. Unlikely scenario in my view, but it could happen. That's why I bring it on the chart. The higher probability in my view is that we are forming a WXY structure to the downside, and we should see lower prices. This can be seen by a break below that swing low here at 20,945. The other possibility is and in this being this a WXY, we need our our Y wave to the downside as an A, B, C structure labeled in white. The other scenario is that this is an A, B, and a C structure. In the C structure, we would have in 1, 2, 3, 4, 5. Okay, so when we see a clear impact to the downside, it could be that it's an ABC, but at the end it doesn't make any difference because both counts, either in the WXY or an ABC structure, they point lower. In both scenarios, in the ABC structure and in the WXY structure, I do expect, if we hold certain levels here, the price to move higher, grab the liquidity and sell off from here. Okay. In the finishing move or in the triangle pattern here, the price needs to take out everything here. It goes higher, okay? And this can only be displayed by breaking the green line. So I think I have set everything. Did I forget anything? No, not really. I think everything is clear. We have, let me just do something so you can see what I mean a little bit better. From the highs would be an ABC move. That would be an impulse. So I'm run them by side here right now. Okay, the third wave needs to be the longest one. Fourth wave a little bit time longer. So it would look something like this, okay? And this would be then the C wave down. In the white count, it's the Y wave in an ABC structure. In the blue count, which is also finishing the B wave and the C wave, then we have to put a C there. It would be an impulse to the downside. So if we go in the triangle pattern and we finish wave E down here on the Friday 31, then this is already the beginning of the C wave, but it's very improbable, okay? It doesn't look impulsive to me, and C waves can never be anything different than an impulse. C waves always have to be an impulse, always, okay? They have to be an impulse. And that's why there's so much overlap inside that my highest probabilities are that we are finishing the Y wave of X here and then see lower prices as discussed in white or blue. So I think I have everything. Guys, yeah, as always, feel free to write anything in the comments. Take your levels or take the levels if you want. I can zoom in again here. And remember that our liquidity is just sitting at the 88.2 here, our naked point of control. And yeah, let's see how this is playing out. But we also have to be, and I tell this again, we also have to be on the side of caution that we break down directly, okay? That is also the point I want to make you aware of. I mean, I just highlight that for you that you are prepared. And if we break the 78.6 down here, and let me just do something for you so that you have all the numbers, so you can take them down if you want. I'm going to remove that, and no, that we can leave, but we need the price. So these are the support levels, okay? Write them down, please. These are very important. The first one is the 78.6 here at 21,535. A hold of this can move the channel higher and then see lower prices. But if we break down directly, okay, I normally want the price to go a little bit higher, grab the liquidity, and then sell off again. But it could be that we break down to the downside. In this kind of situation or this kind of news, what we get every day, I'm very happy, honestly, that everything so far worked out very nicely. So we didn't have big errors inside here. How shall I say it? Errors, interpretation errors. So everything at the moment is relatively good working. So we have to be also on the side of caution that this thing can drop to the downside. Okay, just be aware, and therefore you have the 78.6 here. I'm going to zoom in again for the price. And this is then 21,153. Okay, that is this level. If we break below here and break below the swing low to the downside of this this red line at 20,941, I think we go directly down. And then we have to possibly rethink if our move up to the upside is not already done here. Okay, but this is a book we can read later or tomorrow or the next week when we are taking step, or let's take it step by step now. We are prepared for all counts now, the white count, the yellow count, the blue count later on in the correction, in the move down, I mean, or the ABC structure in the Y wave. These are honestly very simple. I mean, I can delete the blue one because they both point to the downside here, okay? But I leave them on for now so that you can be prepared for both situations down here in the move down. But please focus on this line upness, on this. One second, I need to drink it. One thing. I need to drink a little bit water here. Sorry. Be prepared for a possible move higher in this area, then a sell-off, and also be prepared for a direct drop, okay? This is also, I want to just rule it out. Be prepared for this. In this actual market environment, everything is possible, okay? Good, guys. I hope you enjoyed the video. You get a little bit benefit out of it, and I hope I explained everything. It was a long video now, about nearly 30 minutes. So yeah, feel free to reach out to me if you have any questions, and feel free, yeah, ask me anything. Guys, I wish you a very nice weekend and a very relaxful weekend. And we hear us on Monday next week. What date is it, by the way? It's the 10th of February. Oh my God, 10th of February already. So guys, have a nice weekend. Bye bye. Ciao, ciao, and thanks for watching. Ciao, ciao.